Questions 2, if you look at this, first thing when you come to these questions, the first thing you should do is always refer to your notes to accounts. Hey guys? Are you with me? Okay, so if you look at here, your notes to account, you can see here you have a fixed asset, cost is 100,000, book value is 20,000, means that your net book value is 20,000. So how much is your depreciation? Depreciation will be, accumulated depreciation will be 80,000, right? Question say you have sold for 25,000. Now what is the account you need to open? Here you got 3 accounts you need to open. Fixed asset is this one here. Non-current asset accounts, accumulated depreciations, and disposal. 3 accounts. So can we open it? Just get a if you base on the information that you have it here, okay, you better see in front if you cannot see at the back. Now based on the information that you have it here, your opening for your non-current asset accounts is 600, right? BD. Then your CD will be 730. During this year, just now they say disposal, right? How much the cost? 100. Okay, so balance by right here you have 830. What's the thing that you have it here? 1 and 2. You might have possibility only 2 things. One is cash, another will be revaluations, right? So check your questions. Do you have revaluations? Year 1 you have nothing, year 2 you have 50. So here you will have 50. Are you guys okay? So how much is a cash purchase for this year? $120. 100 and how much? 180. Okay or not, guys? Hello? Okay, so here you only need these figures for which investment, financing, operating, investment, plus or minus? Plus or minus? You buy asset, right? Cash in or out? Out, right? So minus. Cash outflow, so minus investment. Okay. Now next, accumulated depreciations. You have your opening is 220, year end is 240. So BD here 220, CD 240, right? During the year disposal, just now we calculated your disposal is your cost is 100 here. Then 20 is the net book value. Accumulated depreciation is 80, right? This part just now. Okay, so here you will have 80 accumulated depreciation, go to disposal. Okay or not, guys? Okay, so here 320. Current year depreciation will be 100. Are you guys okay? Where are you going to use this figure 100? Add to operating. Are you guys? Can you follow? Okay or not? Are you okay? Anything you want to ask, Johnny? Can you see? You need to switch off the light?
Yes.
Okay or not? Can you see now? Okay. So, can I go on? Okay. Now, next. Okay, the next account that you should have will be your disposal account, right? Okay, disposal account, double entry here, you have 100 for your non-current asset. And then accumulated depreciations, here you have 80. Just now question mentioned in your notes number 1, it sell for how much? 25, right? Bank received 25. So here you have 105. Here you by right you should have a 5. 105. So this 5 is a plus or profit or loss? Profit, right? Okay, now you have two figures here related that you need to use. The first one, 25. Where are you going to use this figure? Operating, investing, financing. Operating, investing, financing. This is the money. This is the money you get from disposal, right? Huh? Your answer is investing. Plus or minus investing? Plus investing because cash inflow. You receive money. So plus investing 25k. Okay, how about this profit? Are you going to use it? Yes, under operating. Plus or minus? Minus. Why? Because previously profit you add on to your profit, right? But this is a non-cash item, so now you have to minus out from your operating. I guess okay? That's why it's a minus side. Yeah? You write profit on disposal, but then you put a minus sign. Okay guys, this part, notes number 1. Are you okay? Settle? Once I close it, no more. But you have it in your answer lah. Okay? Anything you wanna ask? Why 100 minus? This 100 is the cost, this is the net worth value. So total is your accumulated depreciation. This is your accumulated depreciation, 80. From your notes number 1. Okay guys? Okay. Next. So now look at your questions number 2. Notes number 2. 50% of the loan was repaid on 30th of September year 2. Your year end is on 30th of September year 2, right? So here they say this is year 1. Year 1, beginning of the year, you have 100,000 as your loan. End of the year, when come to year 2, your loan become 50,000. Okay, now my question here, when you want to pay interest, right? 10% interest. Now we are doing year 2. We are doing this September 30th of September year 2 accounts. My loan interest I should base on 100 or 50. 100 or 50. Why 100? You pay the last day of the financial year, right? Here they say, if you look at this, your beginning of your financial year should be on 1st of October, year 1, until 30th of September, year 2, right? Question mentions your loan was repaid on this date. Means that beginning of the year you have 100 from last year until this year. Until the last day, then you pay back 50. That's why your balance you have 50. Are you guys okay? So you use 100,000 their money, bank money, 100,000. You use their money for the one whole year, for this one whole year. So you think bank will charge you interest based on 50 or based on 100? Are you guys okay now? So you have a interest expenses. Interest expenses will be 10% times 100. So it means your interest expenses for this year will be 100,000. Are you guys okay? Anything you want to ask? Okay, now look at these questions. Do you have any interest payable? No, right? So it means that if you have no interest payable, it basically means that your interest account will look like this. Cash or bank or whatever, okay, is 10,000, and your P&L figures will be also 10,000. Are you guys with me? Because you don't have payable, interest payable, so you don't have BD, you don't have CD. So these two, you'll be using it in different area. Do you remember? Interest account. P&L will be on top when you adjust for non-cash item. This is non-cash item. 10,000 is interest paid because you pay by cash. So when you check your answer, you'll figure out here, initially you have also interest expenses 10,000, you add back because it's a non-cash item, P&L figures. Then later on, it's the same figure, 10,000, you minus. It seems like repeat, right? Seems like you're doing something, don't know why you're doing same thing, just plus and minus the same figures. This is only because this question you don't have interest payable. If this question you have BD and CD, let's say, if this question you have a BD of 5,000 and then you have a CD of 8,000, then your figure will not be the same. You will know that this will be 10K from the calculation, you know it's 10K. So 15K minus 8,000, you got how much? 7,000, right? Your cash amount will be 7,000. So these questions, if you have an opening and closing, then your figure will be different. But for questions 2, your figure is the same because no opening, no closing. Are you guys okay? You get it, because not every question is like this. Some question you have opening and closing. Then you have to figure out. Are you guys clear? This account, if you see there's no opening, no closing, you want to open or not, up to you. Okay, now next. Number 1 and 2 done. Number 3, increase in share capital took place on 1st of June year 2. Share capital increase 80, right? So this one no issue, you just add on 80 to your financing. Cash plus or minus? Plus. Okay, now number 4, interim dividend was paid. Okay, now look at this. Your interim dividend is 5 cents per shares, right? You paid on May, right? Question is before you increase share capital or after you increase share capital? Before or after? Before. So now look at this. Before is 200 unit of shares. 1 shares is 5 cents. Total dividend is how much? You have 200 unit of shares. Okay. 200 unit of shares times 0.05. So this is 10. Right? So this 10 is what? You'll have your interim dividend. Are you guys okay? Now, where are you going to use your interim dividend? When the question gives you interim dividend, so it must be linked to your retained earning accounts. It's related to your dividend payable accounts. Are you guys clear? If you see dividend, it must be these two accounts together. Can you follow? Okay, now dividend payable account, if you look at here, opening is 18 BD, and then closing is 22, right? This is year 1, year 2. So opening 18, closing is 22. Plus current year dividend, this one, interim dividend is 10 interim dividend. Right? And then you have a final dividend of 22. The closing is always your final dividend, yeah guys. So this is your final dividend. So total here is this will be your cash payment. Are you guys okay? But before that, we also need to do retained earning accounts. Dividend payable accounts, are you okay? Anything, any figure you're not sure where to get? 22 is always from here. Okay, next. Oh, 28. Okay or not, guys? Okay, now retained earning opening is, if you look at here, opening 176, closing is 203. Now you know the dividend figures, right? Here is 10, here is 22. You have interim dividend, you have final dividend. Okay? Questions never give you profit after tax, right? So you need to figure out your profit after tax. This one, profit after tax. From here only you can do your cash flow. You remember your cash flow statement always start with profit before tax, right? Okay, so this is profit after tax. You need to get this figure first. Okay, so add on everything here. Minus this. Answer is 59. Okay or not, guys? Now this is profit after tax. If you want to look for profit before tax, means you have to add back your tax. Okay? So, but in this question, if you look at here, just now they mentions taxation has not been allowed, therefore ignore tax. So it means that this company no tax. So this is profit before tax already, because no tax, they have not been taxed. You guys okay? So here you have how many figures you need? Basically, this one 59. This will be your profit before tax. Okay, and this 22. This will be your dividend. Dividend can be in operating, it can also be in your financing. Plus or minus? Minus financing or minus operating. Either one. Are you guys okay? Now, this one. Next, the first one done. Inventory, you just get the difference will be, right? This one, can you do it? Okay or not? This one just get the difference. Minus 9, right? Inventory reduced by 9 means that you sell it. So your cash flow plus 9. Okay? So here, account receivable reduced, right? 90 become 86 means that your debtors pay you money. Okay? sorry, this one is increased by 9, right? So minus 9 because you use your money to buy the inventory. Okay, now cash. Okay, one more thing. You look at here, cash. You have a cash figure here, but then you also have a bank overdraft figures here. So your net cash amount opening and closing, it will be the net figures. So by right, your opening, you remember when we do, you have to get the difference. Okay, you get the difference. Something wrong here. Changes in the year, then plus BD, you get your CD, right? When you do statement at the end, the last 3 figures, you saw it like this, right? Okay, your BD will be 4 minus 13, and your CD will be your 7 minus 18 because of bank overdraft. If you don't have bank overdraft, normally you just put 4 and 7, right? But in this case, it's the other way. Because of bank overdraft, you'll put a negative 11 here, negative 9 here, and here's negative 11. So your changes supposed to be negative 2. Are you guys clear? Okay. Now, next, here done. Just now we mentioned here you have increased cash flow 80. Go to financing, right? F plus 80. Revaluation reserve you have used up when you do your T account for non-current asset. Retained earning done. Loan accounts. So here financing, loan reduced, right? So minus 50 because you pay your loan. So cash flow out by 50 under financing. Okay. Then your account payable, if you look at here, reduce, right? Increase, right? Account payable increase. So your cash flow plus or minus? Plus. So operating plus 2. And the last one, dividend, we already do this adjustment, so you remember here dividend. Okay or not? These 3 just now we mentioned already. Now from here, next thing what you need to do is get this cash flow done. All this T account basically is needed. Okay guys, can you try to do now?